Hello everybody and welcome back. This is Karan Singh from Optimal Loans, and in today's video we'll be discussing all the factors that take part and affect your interest rate. So let's get right to it. So first we're going to discuss a purchase transaction where you're buying the property, and second we'll discuss a refinance transaction where you've already had a property and you're going to refinance your mortgage for various reasons. All right, so there's four factors that take place. The first one is property use. What are you buying the property for? Is it for you to live in, which is called primary use, or are you going to buy the property and rent it out, which is called investment? So primary, or I'm going to abbreviate it as INV, investment. Second is impounds, a confusing word, but what it means is, are you going to pay your taxes and insurance on your own, or are you going to allow the lender to pay for them? So for this one, we're just going to put yes or no. Third one is credit score, which is pretty self-explanatory. Do you have an 800 credit score or a 750 credit score? The third one is an acronym called LTV, which stands for loan to value, which is a ratio. We're not going to be getting into, we're not going to go too deep on how this works. But in layman terms, what it means is it's how much are you vested in the property. So for example, this is a purchase scenario. Are you putting 5% down, 10% down, or 20% down? So I'm going to write down the acronym for you. Loan to value. All right, so let's discuss these one by one. So really quickly, property use. So if you're buying it for a primary use and not investment property, your interest rate is generally going to be better because you're going to buy it to live in. And for people that are investing or buying a second home to rent, their interest rate is not going to be as good as compared to somebody who's buying it for a primary reason. The next one is impounds. Now, to all the borrowers, I always recommend that they should say yes to this one because you're going to pay taxes regardless, but the lender feels it's more secure way, even though they feel everybody's responsible. They feel it's more secure that they pay your taxes for you. So if you put yes on impounds, you're generally going to get a better interest rate. Now, when I say a better interest rate, what I mean is you can either have a lower interest rate or you can have the same interest rate but with more of a rebate. Not to confuse you, what that means is that rebate could cover some of your closing costs, which if you say no, that rebate might be lower as compared to if you say yes, I'll have impounds, then that rebate might be higher. So you get the point. Next one is credit score. We already talked about this. Somebody who has an 800 credit score as compared to 750, the 800 person is going to have a better rate. The last one is LTV. If you put 20% down in your transaction as opposed to 10% down, the 20% down scenario is going to give you a better interest rate. Now let's flip the switch and look at a refinance transaction. All the four factors are going to be identical. The fifth one I'm going to add is known as purpose. And what this means is, why are you refinancing? Are you refinancing to lower your mortgage payment and lower your interest rate, or are you refinancing to get cash out? Now, some of you might be confused. What do you mean by cash out? Well, if you've already bought a house and it's been X number of years and you're making your mortgage payments and the market has been going up like it is today, you're going to build some equity. For example, if your loan amount is $600,000 and your property value is $900,000, you have $300,000 of equity that you can pull out. Now, there's some metrics behind that where I'm not going to discuss today, but the lender could give you some cash out. So back to our question here, there's two types of refinances. So one is rate and term, and the second one is cash out. Usually in this situation, the rate and term is going to have a better interest rate compared to a cash out interest rate. Now, please don't take these individually. That was the purpose here. They all work as a whole. That all these put together give you your interest rate, okay? Sometimes there's misconceptions out there. Somebody might say, hey, I have an 800 credit score. What the heck's going on? Why is my interest rate so high? Well, it's not just your credit score. It's all these things put together depending on if it's a purchase or a refinance. Well, if this was useful to you guys, please don't forget to share, like, and comment. Until next time, folks, this is Karan Singh from Optimal Loans. Thank you for watching.